Good evening. This is Mark Mendonça. We are starting at 8:30 p.m. sharp. You all can hear us. You can put in your comment on the chat window. Good evening, everyone. We are starting in about 6 minutes. This is Mark Mendonça, and you are joining Empower series, MCA-EC's Empower Me series. And today's topic is international tax. Cecil Nazareth. Those who just joined, welcome everyone. This is Mark Mendonça, Empower Me series. MCS is monthly series, and today we are talking about international tax, and the presenter is Cecil Nazareth. We are going to start in 5 minutes.
Hello? No, I can't. Okay, can I speak? Can you hear me? I'm on. I didn't do anything.
Hello, hi Cecil.
Yes.
I think everyone can hear you online.
Okay, I'll start.
Okay.
Mark, I'll start.
Hello, hi Cecil.
Yes, I'm here.
I think everyone can hear you online.
Okay, I'll start. All right, well, welcome to today's session on international taxation. Okay, we have done a session, and thank you, Lance, Mark Mendoza, and the organization for putting this together. Happy to contribute. Being of Minglorean origin, I'm really happy to give back. So we have a big firm. We are three brothers, Cecil, Chris, and Clem. We do international taxation. So we know global information much better than most other CPA firms. We've been around more than 30 plus years in the US. So understand both sides of the equation, and would be happy to share some thoughts, ideas, suggestions with you. Okay, disclaimer, this is for educational purposes only. Please consult your local CPA, CA, or tax advisor. These slides have a copyright and cannot be used without the permission of the presenter. Another comment I'll make is international tax law is very complex, and this is not a do-it-yourself exercise. And don't guess. I have too many people I visit or in conferences, seminars. This is really complex international tax law, and it's not as easy as saying yes is deductible or not deductible, or I can guess as to what's the right answer. And you really want to go to a tax professional who understands international tax law. And the US has very complicated international tax law, but it's very, very good. In fact, I just did a seminar about 3 days ago for a subsidiary of GE Capital. The whole 8 hours I did on international tax. So it's complex, and unless you know the intricacies of the law, you'll be just taking a chance. So consult your local CPA or whoever, but try to get an advisor. The second comment I'll make, it's like, everyone thinks they know tax, but they really don't. When you look at, it's like going to a general practitioner when you want to have heart surgery. So most CPAs in the US don't practice in this arena, and the Indian CAs also don't practice in this arena. So you need, in complex situation, need to get some good advice. Okay, yes, I'm on slide 3. It's an international tax primer. We'll talk about wealth transfer, US tax planning, cross-border issues, appropriate tax structure, and high-level India-US tax differences. Okay, and I'm positive every one of you can take something away from today's seminar. So here's a tax slide of individuals, corporations, US and India. So in India, in US, we'll have FBAR 1040 reporting if you're on a calendar year. And if you're a corporation, you file a form called 1120 and 1120F. And then you get foreign tax credits. FTC is called foreign tax credits. So, we'll get to that. And on the India side, you have foreign assets. They are getting stricter on foreign assets. Your tax return is a March year end as opposed to a December year end. Now, corporate tax rate in India is 30% plus 12%, so it's dividend distribution tax. So individuals don't pay the tax, but corporations do. On slide 5, FBAR penalty has been revised. So now it's only a 5% penalty for non-compliance, but it has to be really what I call insignificant. You are not aware of it, and you're not coming forward with $5 million saying, oh, I forgot to comply. So it is very a reasonable approach, and I'll get to that in a minute. If it's greater than 50,000 in tax liability today, your passport can be revoked. So you might go to the airport and realize, oh, I cannot take this flight. and it's a really major issue. So I really urge a lot of international people, and if you owe more than 50,000 in a tax liability today, the US government has the authority to revoke your passport until all the debts have been paid. So very strict rule come in very recently, like I think a year ago. Due dates for FBAR has been moved up to April 15th. So next year, just make sure you're aware of that. Not June 30th, is April 15th. Corporation partnerships also will have a different year end. I'm on slide 6. I think about simplified procedures. There's a 5% penalty, like I mentioned before, but basically 3 approaches that are available. One is a silent disclosure. What we used to just file a 3 years amended and finish it off. The streamlined procedure is 3 years amended and 6 years of FBAR reporting, 20% accuracy related penalty plus interest. And then finally, OVDI, which is Offshore Voluntary Disclosure Initiative, 27.5% on the bank balance and 20% accuracy and related penalties. So FBAR is still around, and it's better you comply rather than decide you don't want to